In a world where the economy can change in an instant, are you keeping up with the latest trends?
Absolutely. Join financial luminaries Danielle DiMartino Booth, Grant Williams, and David Lin as they unpack vital insights to help you navigate today's volatile markets.
We've synthesized their extensive discussions using advanced AI technology, transforming hours of analysis into quick, digestible summaries.
So buckle up. Danielle DiMartino Booth kicks us off with why the Fed seems to overlook crucial economic data.
And stay tuned. Grant Williams and David Lin have even more insights to share about market sentiment and investment strategies. Today, we're diving into the discussion led by Danielle DiMartino Booth about the Federal Reserve's handling of critical economic data.
Danielle highlights that the current Fed communication is centered around job growth.
Danielle DiMartino Booth assesses the Fed's insistence on a solid labor market.
She expresses skepticism on whether inflation is genuinely declining, despite some reports suggesting it might.
What does Danielle say about the impact of input costs on inflation?
Danielle points out that if companies cannot pass along these costs to consumers, inflation may not rise as expected.
How does Danielle interpret the latest job revision news?
Danielle indicates that significant downward revisions signal potential job loss trends.
What does Danielle anticipate for the employment landscape this year?
Danielle predicts rising unemployment rates tied to deteriorating business conditions.
What strategies does Danielle recommend for investors?
Danielle urges investors to focus on sectors that can weather economic downturns, such as utilities and dividend-paying stocks.
Welcome back. We're diving into the insights shared by Trade Brigade's analyst regarding the recent tariff negotiations with China and their impact on equity markets.
The analyst points out a significant gap up in equity markets due to the new tariff expectations, creating both opportunities and risks for traders.
As Trade Brigade's analyst noted, the new tariff deal has significantly changed market sentiment, driving indices higher.
While this news appears positive, it's crucial for traders to stay alert, as volatility often follows such market shifts.
The analyst emphasizes that while the current market is showing strength, traders must be aware of potential profit-taking.
It's important to understand that jumping into trades without careful analysis could lead to losses.
A vital takeaway from the analyst's discussion is for traders to manage their expectations during this period of high volatility.
The analyst advises maintaining optimism while also setting realistic trading goals and preparing for unexpected movements.
The analyst foresees ongoing fluctuations in the market as traders respond to upcoming economic indicators and their implications.
It's recommended to keep a close eye on these developments as they can change rapidly.
In conclusion, the analyst highlights the necessity of staying informed and adaptable as market conditions shift.
Ultimately, maintaining a disciplined trading approach focused on risk management can foster long-term success in volatile environments.
Welcome back, everyone. Today, we're diving into the current state of the housing market as Travis and Mitch discuss the skyrocketing mortgage rates and what it means for potential buyers.
They highlight how these trends reflect significant economic shifts and consumer sentiment.
Travis asserts that the increase in mortgage rates creates barriers for prospective homebuyers.
Mitch adds that understanding current conditions is crucial for making informed choices.
Travis explains that rising rates translate to higher monthly payments, impacting affordability.
He emphasizes consumers must reassess their finances before making a purchase.
Mitch discusses how rising inventory levels are not being matched by buyer demand.
He suggests this disconnect highlights deeper market issues. Travis highlights the need for performing due diligence on significant transactions.
He advises knowing your financial landscape and avoiding emotional purchases. Mitch suggests that price corrections in homes may arise due to recent interest rate spikes.
He stresses readiness for potential declines, particularly if economic conditions worsen.
In closing, homebuyers should grasp how rising mortgage rates directly impact their budgets.
Mitch and Travis reiterate the importance of informed decision-making in the current market.
Welcome to Thoughtful Money. Today, we're diving into a monumental shift in the global economic landscape with insights from macro analyst Grant Williams.
Grant emphasizes that the change we are witnessing today is not just temporary, but represents a profound transformation that could alter the financial world for generations to come.
Grant Williams argues that understanding the current global shifts is critical for anyone looking to navigate the shifting financial landscape.
He suggests that these changes are rooted in deep historical cycles, challenging investors to reassess their strategies. Grant elaborates that the ongoing transformations are the result of long historical cycles, underscoring that the repercussions extend far beyond political administrations.
It's not just about who is in power, it's much greater than that.
How can investors prepare for potential economic fallout?
Grant advises individuals to take less risk and focus on business investments where they can exert influence, rather than solely participating in the stock market.
What does Grant predict for inflation and the markets moving forward?
He warns of persistent inflation pressures that could reshape investment strategies and may lead to a lost decade for equity markets.
In conclusion, Grant emphasizes the importance of developing a resilient approach to investing during these times of uncertainty.
This includes prioritizing education and understanding over mere speculation.
Today, we're exploring the latest market analysis presented by David Lin regarding recent shifts in sentiment among traders and investors.
David highlights how changing emotions within the investing community can precede significant market movements.
David Lin observes that a recent influx of negative emails from subscribers indicates a significant shift in market sentiment.
He posits that such a reversal often signals that investors may be on the wrong side of the market.
David explains how recent U.S.-China tariff negotiations are contributing to a bullish sentiment in the markets.
He highlights that the Nasdaq surged significantly, indicating a potential shift in investor confidence.
According to David, the relationship between stocks and bonds is shifting, with stocks gaining popularity while bonds slip.
He warns that bonds may not be as safe as some investors believe, highlighting the volatility in the bond market.
David describes the current market trend as a dead cat bounce, suggesting that while there's short-term optimism, the long-term outlook remains concerning.
He warns investors against becoming overly bullish based on short-term movements.
What predictions does David Lin make for the upcoming market weeks?
David suggests that while current trends are promising, significant market corrections may arise as optimism wanes.
In conclusion, David advises investors to remain cautious about the current market surge, as emotional trading can lead to missteps.
He stresses the importance of monitoring global economic developments to navigate potential corrections effectively.
Welcome to Eurodollar University, where today we explore labor market insights with our guest, Steve Van Meter.
Steve emphasizes that recent government statistics indicate growing concern about the possibility of overemployment in the current labor market.
Steve Van Meter points out that labor market productivity shows an imbalance, suggesting employers currently have more workers than necessary.
This viewpoint resonates with consumer surveys highlighting fears regarding job security.
What does Steve mention regarding the recent productivity figures?
Steve highlights that productivity has declined, revealing that employers seem to be relying on too many workers without enough output.
How does productivity data correlate with consumer sentiment?
Steve explains that the decline in productivity is linked to a drop in consumer confidence, as individuals sense instability in job security.
What are the implications for workers based on Steve's analysis?
According to Steve, a reality of layoffs and hour cuts looms as companies deal with surplus workforce.
What predictions does Steve make regarding the job market?
Steve suggests that without improvements in productivity and demand, significant job losses could be imminent.
What final thoughts does Steve have for consumers?
Steve advises consumers to adjust their spending habits and remain aware of labor market changes as uncertainty looms.
Wow, what an enlightening discussion we've just wrapped up.
Indeed, each expert brought so much to the table, from Steve Van Meter's eye-opening take on overemployment to Danielle DiMartino Booth's skepticism about inflation.
It's fascinating how they all agree on one thing. The economy is uncertain, and we need to navigate it carefully.
Right? But I was surprised to see how they diverged on the implications of current labor stats. Van Meter sees overemployment, while DiMartino Booth worried about recession signals.
And then there was Grant Williams, advocating for resilient investing, compared to Mitch and Travis's emphasis on cautious home buying.
Absolutely. So many viewpoints to consider, and they all intertwine in this unpredictable landscape.
If you found these insights valuable, don't forget to give us a thumbs up and subscribe for more expert analyses.
Your support keeps us going and helps ensure you won't miss any of our upcoming discussions.
Stay tuned for our next video where we unravel global trade dynamics. You definitely don't want to miss it.